Committee names on the move include Uber, $1.5 billion accelerated buyback. Target raised in 96, reiterated a top 2025 pick at B of A. Bryn, you bought more of this last week, also added to Wedbush's best ideas list. This thing is not traded all that well to finish 24. There are better things ahead.
Yeah, I think for sure. So I talked about last week the stock buyback that they had just barely gotten started. They announced it in February of 2024. And so they said in their note, our stock is undervalued relative to the strength in our business. And so I have continued to reiterate, I think this long Tesla, short Uber, or even vice versa earlier when that iRobot day came out, it doesn't hold any water. They're two distinct businesses. Robo-taxis aren't coming out for a long time, and Uber continues to get stronger and stronger. I buy good CEOs, buy great CEOs. Dara is one of the best in the business, so I still think it's cheap, and the stock could easily have a 9 handle by the end of the year.
Wow. Joe?
No, I think it can also. Look, I think a lot of people, when they see the buyback, and Bryn is correct that they did reference the value of the business relative to what they believe it should be. But I think when you think about a buyback, people say, okay, they think their stock is cheap. I think the way you have to look at this buyback as they are confident about the mobility business and the mobility's business deriving and generating free cash flow. And I think that's been the challenge and the question for some investors over the last year is, will you see the acceleration in the free cash flow? Because you see it at times, and then at other times it seems to disappear. So I think this gives you confidence. I was a seller personally of the stock in the low 70s, not buying it back here. I'm going to allow this to breathe a little bit, but I would look to get back in personally. I have the comfort of knowing it's in the ETF as well.
It's having a nice day today. Weiss, what do you want to say on this? Bryn made a big call. I mean, could have a 9 handle.
Yeah, so I've actually been looking at it. I sold it at about this level, a while ago. Here's what I like about it. I do think that the work from home experiment is thinning out. So as more people go back to the office, there'll be more Ubers going to meetings, et cetera, in the cities, number one. However, what I've got to balance that against, and this is what I'm thinking through, is that Uber Eats is a commodity business. There are so many at the trough here that are looking to, for the home delivery of food, et cetera. And I don't know. I've got to do some work on figuring out how important that is, because the restaurants are rebelling against it. They are saying, you've got to cut prices. We can't afford this. So that's the issue. But likely to buy it, though.
Jimmy, Disney's up 1.25% today, merging Hulu Plus Live into Fubo. That stock was up a ton. But there's Disney with a nice gain today. What do you think about this as you hold this stock?
I feel like the narrative has changed here. I think it changed at the last earnings report, and I think if they confirm the growth rate that they put out at the last earnings report, on the next earnings report, it really will pick up speed. Now, what is that earnings growth going to come from? Primarily from the experiences, from the theme parks and the cruise businesses, into which Disney is leaning massively. Additionally, though, let's not forget the streaming business, which has a high profit margin. It is now profitable. And I think there's a lot of room for the estimates on that to go higher. There's still some questions out there. What will the succession plan look like? I'll bet in the first half of this year we get that cleaned up, that we get an announcement of who it is, and that we get this ready to turn over in the next at the beginning of the next year. And then, of course, there is still a payment to be made, most likely, from Disney to Comcast for the Hulu segment that it's buying from Comcast. They've already put down almost $9 billion. If they have to put another $3-4 billion, that's actually going to be a drop in the bucket compared to what the profitability of that business should be.
Weiss, Vertiv. You bought more on Friday.
I did.
You continue to make the case on this program why you like the stock. Morgan Stanley is too. They initiated today overweight. 150 is the price target. They say it's too attractive to ignore.
Yeah, look, the stock had traded into the 140s and then settled back down. I think it may have touched 110, 111. And that was because fears of, why are they only growing at 90%? Think how ridiculous that is, 90%, when we're seeing CapEx in data centers grow at a multiple of that. And the answer is you've got to wait for the structure to be up. So there's a natural lag before you can put the power and the energy solutions into the data centers. So to me, this is a pure play, the purest play in the market for data centers, aside from a pure data center play, which is a REIT. So this will give you performance. So I like this quite a bit. I think it goes through the old highs, which would get it to 150, and keeps going from there.
Big winner today for sure.
Yeah.